everyone to our August Spark series. It's hard to believe we're already in August this year. This is our fifth Spark series of the year, starting back in March, and we're super excited to have all of you here as guests. I'm excited to introduce our panel today, and we're talking about money. We're talking about venture capital. We're talking about how to prepare for all of those things. So super excited today. So what I would like to do first is I'm going to introduce our panels, and then we're just going to jump right into a really great conversation. And welcome, Raino. We see that you're also tuning in, so we'll have you come off camera. And Destiny, let's start with you. So Destiny and I have been partners and friends for over 5 years. She is coming to us from Maryland, and I'll let her introduce herself to you today.
All right, thanks, Diane. Hello, everyone. My name is Destiny Mitchell, and I'm with LISC, which is Local Initiative Support Corporation. I have the pleasure of being on our National Economic Development team, and I lead our National Business Development Organization Network. A lot of words, we'll get to it in some of the questions there. But what I basically do is support these organizations via different programs, pilots, funding, grants, different opportunities so that business development organizations like this organization are able to better support entrepreneurs, startups, founders, and things of that nature. So making sure we're connected to those resources and those networks that make everyone successful. So happy to be here and happy to be a part of the conversation.
Excellent. Thank you, Destiny. Nick, let's hear from you.
Sure. I'm Nick Krabs. I'm one of the partners at Vinyl, which is a software development consultancy headquartered in Los Angeles, but our largest team is actually here in Boise, Idaho. For the last several years, I've been working within our ecosystem to kind of advance early stage founders and help them get the traction and resources they need to be successful. And so I ran Boise Entrepreneur Week, formerly Boise Startup Week, for 7 years, advised, 100 or more early stage founders and companies through that process. Met Raino through Trailhead when Trailhead was brand new, and he was kind of the founding executive director there, and all the great programs that go on at Trailhead. I'm stealing your thunder here, buddy. So no, that's basically what I spend my time doing outside of building cool software projects for great companies.
And he gives a lot of his time to many nonprofits and boards and all the things, Nick. Raino, let's hear from you.
Hi. Yeah, Nick already explained who I am. Just kidding. My name is Raino Zoller, and I've been a long time entrepreneur, angel investor. Like Nick mentioned, I was the founding executive director of Trailhead, was trying to help ways to help that whole ecosystem, help early stage companies get up and going, and help give them better tools, better connections in order to do so. These days, more on the investment side than on the operating side. But again, just love startups, love helping companies kind of figure out how to bring new capabilities to the world. So that's me.
Awesome. So let's really just dive right into this conversation today. We titled this workshop Venture Ready. So, as Nick and I were talking about this workshop today, and we're thinking, does everyone know what venture is and what does it even mean to be venture ready? So let's kind of start and maybe really define what that means. And let's just start with that. And I'd love to hear from all three of you on this question. Whoever wants to jump in first.
I'll take the plunge.
No, go ahead, Nick. Go first.
So I think, when you first reach out to talk about this panel, one of the first thoughts I had was really defining VC investment and how that's different from a whole host of different kind of funding options that are available to companies generally. And VC is actually pretty specific. I think a lot of maybe first-time business owners or first-time founders have kind of been led a little bit astray in the sense that they, kind of put these pitch decks together and they spend a lot of time thinking about going and pitching investors, not really understanding what venture capital is and what it's designed to fund. And so VC investment, just real quick, it's really designed for startups, mostly coming from innovative technology or innovative business models that tend to be very high risk. And so they need to be grouped together to mitigate the risk in order to invest in them. And that is the loosest and 30,000 foot definition of what is VC and venture capital specifically. Raino, I'm sure, has a lot more that he can add on to that. So that's where I'll tag you in since you spend a lot more time. But I think it's important to just define that as we get started.
Yeah, to add a little bit to what Nick just said, I think that probably the biggest thing is that venture capitalists are taking other people's money and then trying to find high growth vehicles. Like Nick said, they're high risk, but also they need to have that potential to be that huge home run. Because of the risk associated with these early stage investments, most by nature are going to fail and become zeros on the balance sheet. So the ones that do succeed need to have that potential to be a 10, a 20, a 30 times return on that initial investment. Further down the road, those numbers go down a little bit, but if a VC can't see a path to a huge win if you are successful, then it's really doesn't really fit into a venture type investment. Therefore, the name venture means that, hey, we're taking high risk with a potential of a very high reward.
And I just wanted to add from just like a foundational perspective, love the definition because people need to be very clear on that. It's like, but also being venture ready, like when are you ready to actually, pitch and have these conversations? Like you have to have your fundamentals down. So yes, you have that innovative business. Yes, it's a high risk business, but you have to have the make sure you have a business plan, making sure that you have strong financial systems, making sure that you have a clear understanding of the market that you're trying to get into, making sure that you have a growth plan that makes sense and things like that. So being venture ready takes a lot of things, but the first things Raino and Nick said, but also wanted to include like that pathway. Like you can't just jump into this. You have to be prepared on the back end as well.
That's so true. In fact, 2 days ago, I hosted an event up in Moscow, and we were talking to, it was a room full of educators, students, tech startups, investors. In fact, a couple of our attendees are in this workshop today in our Spark series, and we were talking about the difference even between venture capital and angel investors versus lending. So let's kind of open up that question of how should a small business owner, entrepreneur, like how should they identify? Like, are there some things that you can identify that they should, when they're trying to decide what is the right path? Because we get startups that call the Idaho Tech Council and they said, I'm looking for funding. Can you connect me with an investor? And that's such a broad. So how do they decide what's the best path to start with?
So I'll jump in here because I think you guys will bring it home. I'm gonna start broad, but I think it really just comes down to alignment, right? Like what are the business goals? What is your timeline? Like what is your tolerance for risk? We've been talking about risk, right? Like VC needs high, usually high risk businesses. But like venture capital is an option. But before you get there, like a lot of small businesses that I encounter and that we work with, like some of them look for grants. Some of them look for community-based financing, like CDFIs, listed as a CDFI as well. But like what makes sense for your business and are you there yet, right? So it's alignment and it's also timing and goal alignment, right? So you can't just pitch to, you need to do research on who you're pitching to as well. Like you can't pitch your business to everyone. It depends on the industry and genre and things like that too. So what do you need to achieve and making sure that there's alignment are the two things I want to share there.
I'd also say, just kind of adding into that, is knowing what kind of business you are and what kind of capital providers, are attracted to that kind of business. What I mean by that is, again, back to VC, that only funds like 3% of the businesses in the United States. Maybe it's like 3 to 5%, depending on the year and what's going on in the world. But it's a relatively small number of companies that tend to get funded through VCs. I say this because I had a mom and pop like coffee shop send me a pitch deck one time, and and I was like, oh, that looks really cool, but like it's not the kind of thing that typically VCs really looking at. And so knowing what kind of business you are, I think, is the first kind of place to start, and then understanding what kind of capital wants to go to that kind of business, and then what kind of supporting materials you have to put together in order to satisfy both the requirements and things that capital will need to see. So, a bank loan, for instance, is very different than what you would be doing, again, back to VC or some other fundraising options that are available. And so I think kind of going through those steps pretty early, pretty quickly, will help a lot in trying to understand where to go to find good partners for what you need to accomplish within your business.
Yeah, I think those guys will cover that pretty well. I mean, I think it's really need to be aligned with both the control. I mean, I think on that spectrum, the VCs are going to have the most control, because if you have a VC investor, they'll probably have the right to fire you as part of their investment. And as you go down the stack into those other kinds of investment, they've got different levels of control because of the type of investment they're making and how they what kind of returns they're expecting. But VC is definitely that's the highest level of control you're giving up to a company on that whole spectrum. So that's another consideration to have.
So Rhino, let me piggyback on that with you because you've invested in a lot of companies. Is there something, and I would say that there's probably like this intuitive hit that you may not even be able to articulate, but is there just something that makes an entrepreneur stand out? Maybe it's something that they do that gives you that confidence of as an investor to take that risk. Is there something that you could share that, like, of all of your experience of working with companies, that just would say, that's a standout moment for me? That's kind of when I know, before I know anything else, that like I can work with them. I think that they're going to do the work, and I think that we're going to have a good relationship together. Because it seems to me like it's very relationship based as well with an investor.
Yeah, I would say probably the biggest, a couple really big things. Number one is they really need to demonstrate a really strong command of who their customer is, what value they're delivering to that customer, what other alternatives does that customer have to solve that problem. And so that's probably the first one, is really understanding the business, the value proposition, the competition, understanding what are the alternatives for it. And then the other one is just some track record that demonstrates that they're the right person to solve this problem. Do they come from that industry? Were they working for a company solving a similar problem? Were they a customer and now they're saying, hey, I needed this solution when I was trying to find it, and it didn't exist in the marketplace. And I believe I'm uniquely suited in order to solve that problem. So having a unique view on the opportunity in the market, and because you, as a startup, you have to be different. I mean, if you're saying I'm 10% better than what's out there, you're never going to win. If you figure out for this set of customers, I am 10x better than anything else that they can acquire in the market, those are the ones that are more interesting, and they need to have the knowledge and the ability to justify why they believe they have that unique position.
Well, I think Rhino touched on something really important here, which is that in those interactions, the real task that you have as a founder is really understanding the story that you're telling. I mean, fundraising oftentimes is an exercise in storytelling around your expertise, how you're entering the market, and practicing that storytelling over and over and over with yourself, with your friends, your family, with many investing pitches, getting that really down. The people who I've seen this do it really, really, really well are the people that really know how to tell the story. And there's a lot of elements to that, right? Rhino hit on almost all of them. Traction in the marketplace. Are you the right founder? You know, what's the value that you're bringing in your product? Those are all kind of the elements that you have to learn how to really tell in a cohesive story that's, you know, attracts interest, right?
So what I'm hearing you say is you can't just ask ChatGPT to write you a business plan and have all of that data on a piece of paper. You actually have to give the investor the confidence by really believing it, breathing it, knowing it, having it practiced. And I know with Destiny, she and I have worked together for a long time, and one of the programs we've worked on is the Small Business Digital Ready program. And because one of the things that you have to drill into entrepreneurs is, even if they aren't an attorney, a CPA, a social media marketer, they have a due diligence to know all of it. Destiny, speak a little bit about some of the work that you've done and the thousands upon thousands of entrepreneurs that you've helped them figure those answers out.
Yeah, so thank you. That was a wonderful segue. So with List, let me take a step back in the context of List, because we do a lot of this support to entrepreneurs, you know, access to capital, helping them get funder ready and things like that, right? So just for context, List is one of the largest CDFIs and largest nonprofit CDFIs in the country. And so with that, in my role, I'm on the program side, economic development, I'm supporting small businesses. But List also does a lot in the space of funding small businesses, and we do housing and things like that too. But I just wanted to focus on those. But like our role is like being an investor, right? Providing capital, making sure we're multiplying the effect of the capital we provide to small businesses and things like that. We're a connector. That's where I fit in. Like that's my place. That's my sweet spot. I'm a connector. Like how are we linking partners? How are we sharing resources? And then innovators, like how are we driving systems changes? What programs are we piloting and things like that, right? So we really, you know, work because of like local partners, like Diane, and then like partner, and then our partner network. So I talked about our business development organization network, right? And so through that, we've been able to partnered with Verizon on the Small Business Digital Ready program. And so that program in particular has been very instrumental in helping us fill in the gaps for entrepreneurs and small businesses in like where they might be missing the mark, or with their business plans, or with access to capital or shared language when it comes to upskilling your business, right? And so, similar to what you were saying, Diane, it's making sure that we are instilling our business development organizations with the skills, tools, and resources to support entrepreneurs. And so I've seen a variety of ways some of our partners have used, we have like access to capital, how do you do P&L statements and things like that. Like, I know this is getting back to the basics a little bit, but I wanted to just share some of these courses and making sure that our partners and our small businesses have a shared language when they have those conversations, so they are able to better prepare small businesses to have those conversations with banks, with investments, whoever their target is, making sure they're able to have those conversations. And so I think it's resources like that, which, and let me go back out again, because I can get in the weeds of that program. I've been in it for a long time, is that, with the Digital Ready program, like there are modules across the board, not just capital, operations, marketing, things like that. There's peer-to-peer learning. There are live sessions. There are grants. We talked about different funding mechanisms. There are grants on there as well, and different incentives as well for small businesses. So, and we try to help in a variety of different ways to small businesses and to these business development organizations. And I hope I haven't gotten too far away from the question, Diane, but it's a lot to try to push into, a succinct answer.
Well, what I love about what you said, and Nick, I'm going to come to you next, because when I think about, it's really not in the weeds. Like, how many times have you judged a pitch competition, Nick, that you feel like this entrepreneur, they've got a great idea, they've got a great product or service, but they haven't done enough due diligence to understand what a P&L statement is, or the nuances of being an entrepreneur. I know that in the tech world, I've seen and met with several tech startups that are coming out of corporate world, and they're intelligent, have decades of experience in their industry, but they've never been an entrepreneur. So what is that like? Nick, you've been an entrepreneur, you've been a founder, you're an investor, you've sat on both sides of the table, as well as you've judged a lot of those. What are your thoughts on this? Like, when you give advice for fundraising, or when you're meeting with that entrepreneur, where do you start with the advice on the advice side of where they should start?
Yeah, well, I mean, there's some kind of evergreen pieces of advice I try to give people. Usually it starts by me hearing their pitch in one way or another, right? So either we're sitting in Trailhead or at a coffee shop, and I've got a slide deck in front of me of what story they're trying to tell. Uh, Investors for VC typically are looking for a couple things. I always like to jokingly say that, your seed round, if you can do it, the best seed round is revenue. So we're talking about traction in the marketplace. Now, of course, not every startup can do that, but if you can, you're walking into pitches in a lot better of a position. So I think investors really are trying to look at, have you figured out your place in the market? How big is that market, and can you replicate it over and over and over and over and over? Right. That makes up the hallmark of, or at least the core of a good pitch. It gives investors something that they can actually evaluate. A lot of the other things that Raino was talking about, are you the right founder to solve this particular problem? I mean, those all kind of get stacked on top of that core principle, which is that, have you found your market? How big is it? And can you replicate the traction that you're getting in the market? If you can answer those three questions, investors are pretty interested to hear, right? And so a lot of times when I'm talking with founders or early stage companies, I'm really trying to hone in on that point more than almost anything else, because that's the core of the storytelling that you have to get across, and however long you have to pitch a particular investor. And sometimes that means asking questions. Like, we had a founder here in town. The first time I hear his pitch, he had created some really cool physical hardware, technology hardware product, connects to your phone. It's really neat stuff, right? And I just asked him, I said, how do you make your revenue replicatable? Because right now your whole business is set up on, I'm going to produce this thing, I'm going to sell it directly to a consumer, and then I'm going to try and go and sell another widget, right? And I said, hardware is very risky. There's a lot of risk adverse investors who stay away from technology hardware products. And so if you had a pitch that included how you're going to, turn this into replicatable business with the same customer over and over, I think you have a pretty strong leg to stand on here. And so he went back and actually reworked his product a little bit to include within the app kind of a subscription service that brings a whole lot more functionality and usability to the hardware product. In the end, he had a better product for having to answer that question. And now he had a predictable path to ARR, right? So he has a better pitch overall just for answering that simple question of how are you going to make revenue replicatable year over year with the customers that you already have. So it's stuff like that. We're really trying to think through where your product meets the opportunity in the marketplace and how you replicate that business and how you have consistency. Those kinds of questions are again the foundation of what makes a good pitch. So that's evergreen advice usually is asking founders where how and quickly can you find some revenue to show that your assumptions about the market are true.
So Rhino, would you say that coaching and having a coachable entrepreneur is also pretty high on the list of one of your internal check boxes on when you make those decisions?
I think it's actually huge. I mean, because especially first-time entrepreneurs, but I think even all entrepreneurs, they got a limited amount of knowledge, and if they recognize that and know, okay, where are my strengths, where are my weaknesses, and are actively seeking out people to help them fill in those weaknesses, either as team members or as advisors or coaches or any other way, those are the ones that are going to have a higher likelihood to succeed. The entrepreneurs that think they know better than anybody else in the room how to build this business, they eventually find out that they're not. And it's one of the most critical things. And I know, very seasoned entrepreneurs that still go out and they build a team of advisors because they know that where their weak spots are and where they need help based on the market opportunity or based on the technology they're building or based on, type of team that they need to build. So people that are successful are very, very good at leveraging a network of helpers of different sorts, whether they're board members, whether they're just advisors, whether there's somebody they grab a coffee with every few months to kind of get their feedback on the option. So the more that we can observe people are actually seeking that versus having it forced upon them, it's a way more interesting opportunity. And the latter we've seen a lot of too, where people just kind of, they'll kind of give the motion to investors that they're listening, but they may not be. And that quickly turns people off.
Mm-hmm. Well, and to piggyback just for 2 seconds, as a founder, having those conversations with lots of investors, that's also building that network at the same time, right? You want to select investors that bring those resources with them in the relationship. And so understanding where those weaknesses and how even some of your investors can plug in beyond just writing a check. To Rhino's point, like over and over and over, those are the founders that tend to have success, right? Are the ones that are really evaluating and fostering in those relationships. And if you walk into every room saying that like this market, everything about it and exclusively, more often than not, you don't. And so having resources of people to tap into to really help you craft and build the company and the story around it, I think is huge. And the investors can do that to Rhino's point.
There's a good quote that I really like. It's ask for money, get advice, ask for advice, get money.
Yep.
And I think it's very true.
Mm-hmm.
So you want to be confident and coachable, right? But not too, yeah, right. So let's talk for just a minute or two about pitching and proof. I know that you mentioned a little bit, Nick. Obviously, the best thing to have is like sales or revenue or some beta testing, something that's proved it other than I think it's going to work. I've studied other similar models. And Dusty, you probably have some opinions about this too. Is like what is the minimum? So obviously, you made a comment too about having conversations with many different advisors, investors to gain that feedback and data. So I'm going to pitch to you. You're going to give me feedback. How much proof, like what are you looking for in the amount? What would be the minimum something that if they don't have this done? And the reason I ask these questions from all of you is that whether it's our listeners that are here with us live today or those that'll be joining later, if they could take away some things like, okay, I think I'm ready to ask for investors, but I don't know if I have the minimum stuff done yet, if I'm truly venture ready or even pitch ready. And anyone can jump in first.
I can start. I mean, I think one of the things that anybody looking to start a business should be doing a lot of is talking to prospective customers. Talking to people whose problem they're planning to solve. And this should happen even before you start building a product. I mean, if you have a hypothesis that, hey, I think there's a big gap in the market, there's this, people have this problem, they want to spend a lot of money on this. Go talk to 20, 30, 50 of those people that you believe is your eventual customer. Have really in-depth conversations, understand their world, understand where this problem fits in their world, how high of a priority is it, what's it worth to them to fix that problem. And that really builds that knowledge of the customer, of the problem, of how a solution might fit into that to make that problem better. And I think being as a very minimum, you need to be able to articulate that learning. Obviously, the more validation you have along that path from, hey, I have this idea, what do you think, to actually selling product, the better off you are. But having some validation that, hey, that's a great idea. When you have that product, I'll be the first one to buy it. If you have 100 people that say that and you're going to get some testimonials, that's more proof than just saying, hey, I've got this great idea that there's this problem out there. I haven't talked to anybody about it yet because it's top secret and I can't spill it to the world or the world's going to take it away from me. Those people are not going to succeed. But if you're hearing that over and over and you've really refined what you're trying to solve, that's the first step on that path. And then further having a real people using it, that's valuable. If they're actually paying for it, it's even more valuable. And the more people using it is even more valuable than that. So really, further along the spectrum you can get before you go and ask for money, the better off you are. One of the wonderful things about AI is the cost of prototyping, especially in software, has gotten dramatically lower. So you can even build a little prototype in a day or two, enough to go show somebody, hey, this is an idea. Hey, what do you think? How would you interact with this? How could you use this? Having any validation along that path can be huge.
Mm-hmm.
So if there's
Yeah,
still oh, go ahead, Nick. Sorry.
Oh, I think, different stages of fundraising are going to ask for, kind of different proof points on what traction and validation you have. Again, my joke about finding revenue as your seed round is not possible for plenty of businesses, but it certainly helps when you're at that stage, right? But to Rhino's point, I think some of the best pitch decks I've ever seen that are talking about validation and traction actually show it as a timeline. So they show, when they started with their idea, the steps they took at that stage, right? I went out and talked to my first 100 customers. Here's what I learned in less than a sentence, right? The next thing I did was I built a prototype. I went and tested that with 30 of the 100 people I talked to, and 10 of those are interested in buying it. So now I have some amount of pre-sale that I can claim in my validation. Okay, well, after I had 10 of them try it, I took 3 of those and then I built some features into this MVP that they specifically asked for when I demoed it to them 2 steps ago. And those 3 people have agreed to write me a check, and now I need to build it for real, and that's why I'm here in front of you today. That's a pretty good traction story, right? And so trying to figure out how to speak to what investors are wanting from you at a certain stage of validation makes a lot of sense. And showing that work, not just on what the last thing you did, but what has that been like over a timeline, I think helps a lot when you're trying to tell the story about traction, about validation in the market, about the size of the opportunity. I think all that stuff really helps.
And one small comment is I think all those things, to me, at a high level, all the things investors ask for is what you should ask yourself before you put all your time and energy into your business. I mean,
right.
These things are risky. They don't pay a lot of money in the early stages. In fact, you're probably going to burn money, if anything. So that same validation you're doing for investors should make you feel more confident that where you're going to be spending your time over the next coming years is a worthwhile endeavor. So don't think about it. Investors need this. I don't. It's that investors and you should be looking for all this stuff.
So Destiny, oh, go ahead. I was just going to call on you.
No, I was just going to say, just building off what they said, just synthesize a polished pitch deck. It'll get you in the door, right? But that proof is what keeps you there. And Nick, I really like what you said about the linear, because I've been the linear timeline and going back and testing and going back to your customer, because I've had the privilege of putting together pitch competitions before, and we did the coaching. So everything you just said before, making sure we had coaching before and things like that, but making sure that also the a strong operational plan, making sure like letting them know that they could have pre-orders, because some businesses don't know, like, oh, pre-orders, they do count toward validating your business and your model and your pitch, right? Making sure that I think Raino, you said there's just clear market demand, right? That is very important. Like if there is no there, if there's no one that's going to buy your product or your opportunity, like it might not work, or it might not be a good opportunity for like this or venture capital and things like that. So everything you said, Nick, I really love, because I've seen some of those models in pitch decks, and it helps you follow their journey, and it shows the intentionality behind that business, being able to go back and get that feedback and being coachable, right? I think that was another word to use too, like going back and like, this didn't work. So taking the feedback of their potential client and making it better and doing those various prototypes and showing the any investors that like that makes them more investable, right?
All right,
Yeah,
let's talk about
I
money.
saw one that did it as like a tree almost, and it was a timeline as a tree, and the branches were pivots. And every
Ooh,
time they like
I
made a
like that.
different decision, they like killed a branch, and I was like, "Oh my God, that's
Ooh.
brilliant." It's
That
like,
is brilliant, actually. That is very brilliant. I haven't
very
seen
good.
it that way. I've seen like more of
Yeah,
that linear
yeah,
model,
yeah.
across the board.
Hmm.
But I love that.
Hmm.
So talk about the money. How much financial information do they need to be prepared to share? What are you looking for to see from them? I mean, if they're asking you for money, how do you want to see what they've put in? Is that need to be included in the timeline? Like, uh, what is, other than like the beta testing and the pitch and the proofing, talk about the money aspect. What are you looking for?
So, so I think just to make it clear and succinct, when you're giving these kind of pitches to get in the door, which is oftentimes what a pitch deck is for, there is certain amount of kind of financial information that you want to include there just to kind of validate what the rest of the story is you're telling. But the real kind of under the covers look is going to come prior to them writing a check after you've done this pitch, right? So I think it's good to delineate to some degree that you're not going to just like put P&Ls. I mean, you could, I guess, but it probably wouldn't be appropriate to stick a P&L in a pitch deck like this. And assume it would be overly helpful, really, unless you just have a particularly strong P&L. If you're just like, hey, I'm in the black, I made $2 million last year, what else do you need to know? Like that's an okay pitch too, but that's not the case for most of these companies. So I think it helps to probably look at how others are pitching. I might even just go talk to some VC and ask what really you need to be prepared for. That's the great thing. If you don't have to pitch a VC every time you talk to them. In the times that I've advised people, I'm like, just go get coffee with them. Like all these people want to help. Just be like, hey, I need some advice. I'm looking to put together a pitch deck. Here's how I'm thinking about structuring this question about finances, especially when you're talking about a company that's really early stage. They might not have any revenue to really report. So you're projecting a lot of this stuff, and go get the advice of people who ultimately, wink, wink, nudge, nudge, are the people you're going to go pitch in a month or two, right? So kind of do that pregame with them a little bit, and they'll give you the answers that you're going to need for the test. Every single one of them will. Every single one. I have never had one of those meetings where they didn't tell you exactly what the answer on the test is before you go pitch them. And so I think that's the way to kind of think about it. And it's going to be different for different businesses. When you ask about what the founders put in, I think that raises kind of another question, which is that understanding what a clean cap table looks like and understanding how to structure maybe other money or other people that have ownership of your business before you walk into an investor, I think is helpful. I'm sure you're going to ask me a question later about red flags. That's one that derails quite a few founders, is having, a cap table that's really messed up. Sometimes the best people to help you with that, unfortunately, cost a little bit of money. They're called lawyers. They're no one's favorite people, but sometimes you got to go make a lawyer buddy and ask some advice from them. Try and ask for lots of advice before you retain one.
Yeah.
is whatever advice I'll give you. So, anyways, I think it's not the same for every company, but sometimes those questions will come up in maybe more closed doors kind of settings.
Yeah, I'll add a couple items. I mean, first of all, I think at least at the angel level, you'll probably want at least to have some level of projections of your revenues and your expenses. so that, you know, an investor can see what are your assumptions, what are you going to spend, and what do you anticipate revenue being for maybe the next 2 to 3 years. Further out is probably less critical because everyone knows that it's still kind of a guess. One of the things that I think investors do look at, and maybe Nick will hit on this later, is some kind of skin in the game from the founder. I mean, what I've seen the whole. Sometimes you see a founder saying, "Well, I haven't put any money into this, and my projections I need to get paid 10 grand a month to do this business, and I've got zero revenue," and that's kind of a red flag because there's no commitment at all from that person. They're going to get a decent salary, and they're going to get all the upside, a lot of the upside, and they're not taking the risk. An investor would likes to see that they're putting in early. They've already put in some skin in the game. They've already put some money into a prototype or to build a website or something that shows that they've actually committed some of their capital. Obviously, the requirements are different. If you're just out of college and never had a full-time job, you can't put in a couple hundred grand of your own money. But if you're later in your career and you've made a lot of money and you've only put in a couple $1,000s, that's kind of a red flag. Is how much do you really believe in this idea? So I think that's one of the things to think about is you need, before you go ask for outside people to give you money, you should have some level of confidence enough to put in some of your money in order to pursue that idea before bringing in third-party investors.
All right. Oh, go ahead, Destiny. Okay, so the last 5 minutes, and then we're going to turn some time over to our attendees. I know that we're going to have some questions because we have a large group joining us today. Some rapid fire questions. I want all three of you to answer. We're going to go through about 2 or 3 questions. The first one is, what is the biggest myth about raising capital?
I'll go. That capital solves all your problems. It doesn't. If it's a mess, it's going to amplify it.
It creates more. I'd say another myth. I mean, go ahead, Nick.
Nope. Too late. You spoke first.
Okay, is that it's easier to raise money everywhere except for Boise. Most good companies that I see in Boise get capital.
Yeah.
And a lot of companies that aren't quite ready don't. But that's probably true in every single market.
I would say I'm going to answer it kind of broadly, and I would say the biggest miss, at least at the stage that I interact with a lot of founders, is something I've kind of harped on this whole time, which is really understanding how to tell your story. Really understanding how to tell your story about you, about the business you're trying to create, about the product or innovation that you're going to try and bring to the market, and why everyone wins if they come and do it with you. You have to answer it. And the better you can do it, the more people who will be attracted to you. And that makes the biggest difference.
Ooh, all really good. So what is one slide that every pitch deck needs, but is often left out? Think for a minute. And if you don't have an answer to that one, you could say, what is one question that you ask that you always get a puzzled look? Same thing, right? Something that gets left out. Raino.
One thing that's often or almost always undervalued, but it's super important, is their go-to-market strategy. How will they sell this? Normally, they're going to have a one bullet. Oh, we're going to do direct sales, or we're going to sell on our website. You need to really understand and have a plan for how to execute the sales motion, because that's probably one of the biggest things that companies struggle with is how to actually sell that product once they're ready to sell it.
That's unfortunate that you said that, because that was totally going to be mine. So
I beat you to it.
this is my fault. No, I think maybe just to kind of to add on to that and to clarify it. We said earlier in this talk that startups are high risk. I mean, it's expected within a lot of funds that 8 or 9, somewhere between 7 and 9 of these startups are either going to fail or just not reach the potential that they could. And there's a whole host of reasons why that happens, why startups fail. There's actually more pits on why you fail than there are paths to being successful, generally speaking. But if you cannot answer how you're going to sell your product in a coherent way that's believable, tested before you walk into to the investor, you're up a creek before they ever even consider you. And so to Raino's point, your go-to-market strategy has to be more than just a bullet point, maybe even more than a slide, right? And the work that you've already done to prove what you're trying to claim, the more you can show that as part of telling that story, the better off you are.
Ooh, good advice. Destiny.
And the last thing I'll add is I'm going back to financials, like a clear financial plan showing how this investment will help your business grow, right? What is the growth strategy there? So everything everyone else said, but also like a clear financial plan. No one should have to guess.
Yeah, back in my coaching days of entrepreneurs, I used to start our one-on-one meetings with, if I pull out my checkbook right now and I write you a really big check, can you tell me in 5 minutes how you're going to spend it? And does that get to you to where you want to be?
Yep.
Because if you haven't done that due diligence, then and if you don't know your go-to-market strategy, it may be short and you may get that amount of money and exhaust all of it, and you still haven't gotten to that point where you've got money coming back in. And so really understanding what you need, what you're looking for, and how you're going to spend it, I think is really important as well. Any last words from our panelists on advice, and then we'll close this out and go to our attendees.
I'll just say build relationships, build up your ecosystem, not just a list of investors, but like build those relationships intentionally.
Raino?
Maybe I'd ask is one thing to think about for a lot of businesses is how do you believe AI is going to impact that business over the next few years? Because that's in everybody's forefront of their thinking is AI going to help your business or is it going to hurt your business? Or how do you make it so that it's going to be helpful for your business as AI continues to get better?
Is that something you think that needs to now be incorporated in the new pitch decks, depending on the product or service? Is
Potentially, yeah.
addressing it? Yeah, addressing AI.
Well, you certainly can ride the wave of FOMO to your next investment if you include it. That's for sure. Um, yeah, I think those are both good pieces of advice. I think getting very customer and product focused as the founder is probably the biggest thing that I try to harp on people. You have to convince everyone around you, whether they're an investor or not, that you really understand the problem that you're trying to solve and that you have brought an innovation to market that matters to solve that problem. And the best founders, the ones I enjoy giving advice to, the ones who I've enjoyed interacting with the most, the ones I've written checks to, the ones I've been clients of mine and vice versa, they're always founders who are very customer focused and spend a lot of time trying to be of service to the need that those customers have.
And with those last words, thank you so much for joining our August Spark series. Connect with us at idahotechcouncil.org. Come join our events and